good afternoon, good evening, traders from across the globe, and welcome to the 1128th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. This video is being filmed on Sunday Night for Trading, Monday, January 27th, 2014, the 1128th installment of these videos. Each one is geared to teach you the art of technical analysis, which I hope makes you a better trader. As we know, futures trading is extremely risky. It can cause substantial financial loss. Futures trading is not suitable for all trading accounts. All right, so for trading Sunday, Monday, we've got a red Omni on the board, traders. It looks like Armageddon out there. It smells like Armageddon out there. I am telling you right now, do not fall in love with the downside. We're starting off with a selling posture. We are certainly selling the market Sunday into Monday. We do not expect too much more downside. There will be some coming possibly, but I've got a great chart segment to show you why. Okay, Monday, Sunday through Monday, but just be careful. Let's go day by day because I do not want you to fall in love with the downside. One of the many reasons is this. Traders, I always put the fundamentals in the mix. I never use them when I call a trade, but I put the fundamentals in the mix for the long-term view always. I always look at the fundamentals and see what the long-term view is. Our day-to-day trading, strictly charts only, we don't care about fundamentals, but you got to kind of know which way the train is going, which track is it on, north or south. So the fundamentals will help you if you understand them, keep you on the right track. And here's what I am telling you right now. This move has happened for one reason. Well, I shouldn't say for one reason, but a main reason is this. Why I don't want you to fall in love with the downside is emerging markets have just pulled back, and it looks really scary. There has been an outflow of money for the past 5 or 6 weeks in droves. I mean, a fire hose of money is coming out of emerging markets. Where do you think that money is going, traders? It's coming out of emerging markets because the Fed is now starting to back off on its policy of buying stocks and buying bonds, right? So if the Fed's backing off, countries are going, oh my goodness, the U.S. is really doing well, and they are pouring money out of their countries right now. And I kid you not, it is earmarked for the United States. That is where it is going. What you have seen is a sympathy move in sympathy with the emerging market spill-off, but it's only because money's being pulled out. It's not because the markets are going crazy or something bad happened. They're pulling out money in droves. And guess where it's going to come? That arrow is going to turn any day, you'll see. Do not fall in love with the downside. Now, that's fundamentally, right? That's the longer-term picture. The short-term picture is go down tomorrow. We've got the red Omni. Let me show you a technical reason why you should not fall in love with the downside. Traders, with no further ado, let's go look at some charts. OmniCamp literally is the place where I hold back on nothing. I teach you all the techniques I've ever learned. I teach you all the great tips and tricks the floor traders taught me in my 32 years coming up. OmniCamp is your chance to come to Las Vegas and study with me, Oscar Carboni, for 4 straight days. And I want to make sure you leave with the knowledge and confidence that you can carry out these techniques yourself. If you feel ready, if you feel like you can come on down to Vegas and study with me for 4 days, come on down to livewithoscar.com and simply click the OmniCamp banner and fill out the application. Traders, the emini S&P daily bar chart, remember the big bull flag we were using and we had the big channel we were using? Well, look what happened. I mean, it did respect that flag for a lot of trades, but kaboom! So look at this. What do you see when you look at that? Armageddon, right? Oh my goodness, the end of the world. Look out, here it comes. Everybody buy gold and silver and bury it in the ground. It's the end of the world. That's what you think when you see that, right? I'm not so sure. Let's go look at a weekly chart. Weekly chart says, wait a minute, stop for a moment, everybody. Don't lose your heads. Why? Look at how long we've been in this bullish channel on a weekly bar chart, week after week after week. Do we have pullbacks? Yes. Do they fall apart? No. We're in a big bull market. Do we have pullbacks? Yes. Does that mean it's Armageddon? Absolutely not. So listen, yes, we could go down. There's room to go down here, maybe even here. It's not the end of the world. If we start taking out this stuff and we start taking out previous lows, we'll talk about the next bear market. For now, you're in a big, booming bull market. It does not just go away in one day on a Friday. So here we are, Dow Jones Transportation Average. Daily bar chart. You look at this, if this was the only chart that you had to gauge buying or selling on Monday off of, you'd buy that, wouldn't you? Because look at the hold here. Look at the hold here. Look at the hold there. But of course, we see the other markets looking very bearish, especially the DAX, so we're not looking to buy it yet. If this holds tomorrow and the cavalry comes in, that's another story. So there's your daily transportation average. Go out to a weekly. We're in Oscar's, one of Oscar's infamous F flags. You know, I've got these Oscarisms. This one's the F flag. Now, we're still inside of that F flag, smartly inside of it on the weekly. If you break under it, there's room to drop. But look at this channel. There's not room to drop too far. Pullbacks happen, right? Pullbacks are part of what happens in trading. But that does not mean the end of the bull market. This is the only pullback we've seen so far. Look at how big that one is and that one without ending the bull market. So don't get your panties in a bunch here yet, traders. You know what I mean? Let this thing gyrate a little bit. I'm not falling in love with the downside. Then there's the NASDAQ. Look at this NASDAQ chart. You've got a tremendous support line. Hold, a hold, a hold, almost a hold here. And here we are right here. So the green line could be support. Then remember the big bull flag? Well, it still exists. It's right here. We got out of the top of that flag, traders, did this and came back, and all we've done was test the top of the flag. I am telling you, this is not purely bearish information you're looking at right here. That's not the worst chart I've ever seen in my life. So maybe it'll come off, but this doesn't look like a bearish beginning of the beginning of a bearish move. Then you've got the long-term view on the NASDAQ. This channel goes all the way back to the crash of 2008. It took us all the way until December of this year, 2013, last year, to get above it. Now we are above it on the weekly, and we've come back and we've tested it, and that's about all we've done so far. This is not the worst thing I've ever seen either. Then you can draw this trend line right here. This is a weekly, don't forget. Lots of weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's 12 weeks in this channel right here. See the channel? We're still in the channel. We haven't broken it yet, and we're still above this long blue one. So listen, on the weeklies, they do not look bearish yet. It could change. You know, OMNI's a day trader. It'll sell as long as it should. But for long term, I don't think we're going into a bear market yet. And you look at the Dow Jones Industrial Average, and this one doesn't look nearly as pretty as the others. It really broke out of that bull flag. If you remember, I showed you this. If the bull flag expands, you can expand it too, but then you can't exaggerate. You can't go any further. You got to go to the lows of the flag if it expands like it did here. So we had this flag. Then it expanded down to here, so we drew in this one and figured, now this is the new flag, right? But that didn't hold either. And we broke through that, and that, my friends, looks like Armageddon. That's the Dow Jones Industrial Average. On the daily, we're going to look at the weekly now. On the weekly, you broke that really, really nice channel that you had on the weekly. So you've got room to come down a little bit, and I think it'll happen. I think you're going to get down here. So I'm not expecting to buy this on Monday, but I don't think the end of the world's coming our way. Then there is this, traders, the DAX. If you recall my last video, I showed you that on the first three charts, it looked a little bullish, but by the time we got to the DAX, I thought the DAX would pull us down. And it certainly did pull us down, so that last video had the proper direction. But this is your daily DAX. It's not really, I mean, it hasn't broken out of this channel at all yet. So it's still in that channel on the daily. Then we look at the weekly, slightly longer term on the DAX, and you'll see that you're in that channel on the weekly as well, and that's a long channel. But, of course, there could be enough room to pull a spill off all the way down to here and still not be the end of the bull market. You could get somewhere under 88.50 and still be in the bull market on your DAX, okay? 88.50 and still in the bull. So, listen, don't call this thing done. Don't call this market baked. And do not fall in love with the downside. So, traders, there's my technical argument why we've got the red Omni for now. But look, It looks like Armageddon. It smells like Armageddon. It is not Armageddon. Not on those charts. Not yet. Now, we know how quickly things can change, and if we really start to dart down, if we become bears, we'll become bears. But for now, that is a bull market having a pullback, a setback a little bit, a backfill, if you will. And again, you will find that those weekly charts are probably showing you that is what I was talking about in the first segment of this video, that it's emerging market money being sucked out of emerging markets. That's getting them nervous. We went in sympathy. Those weekly charts show you that we don't have a long way to go. Traders, I'll see you at livewithoscar.com. If you want to train with me for 4 days, I have one ticket left for OMNI Camp. It's a training session held live here in Vegas from the 21st through the 24th. If you'd like to attend OMNI Camp, come on down to livewithoscar.com and fill out your OMNI Camp applications. Traders, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll traders, stops are going to have to be really wide on Monday. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.